Hey everyone, welcome back to my channel. If you're new here, I'm Courtney Thornell. Please be sure to like and subscribe to my channel. Now, today we're going to dive into a topic that could be a bit confusing for first-time home buyers: closing costs. We're going to break down everything you need to know about closing costs, including the down payment and all of the line items on a loan estimate or closing disclosure, so you can go into your home purchase with confidence. Now, this video will be a little bit more drawn out, but I just want to help so that there won't be any surprises once you go into escrow on a property. Okay, so let's start with the basics. Closing costs are fees and expenses you'll need to pay when you finalize your home purchase. Now, these costs are in addition to your down payment, and they cover a variety of services required to complete the transaction. Closing costs can vary greatly depending on where you're buying, and this plays a big factor: which state, county, city you're buying in. Are you getting your taxes and insurance impounded into your account? The price of the home and the specific terms of your loan. There are so many factors that go into closing costs, and they aren't a one-size-fits-all, but they do typically range from 2 to 6% of the purchase price. Now, before we get into the nitty-gritty of the closing costs, let's talk about the down payment. Your down payment is the amount of money you'll pay up front when you buy a home. Now, it could be a percentage of the purchase price, or it could be a flat dollar amount. And the amount you put down can affect your loan terms, including your interest rate and whether or not you'll need to pay private mortgage insurance, which is PMI. Now, if you put down less than 20% with some loan programs, you might have to pay PMI, which is an additional monthly cost to protect the lender in case you default on the loan. So, a down payment example: if you are buying a $300,000 home and you put down 20%, that's $60,000 for the down payment. Now, while down payment is technically not part of closing costs, it is an expense you'll need to plan for along with the closing costs. Now let's get into the details of the closing costs. You'll receive a loan estimate, or LE, within 3 days of your loan being submitted that will outline the terms of your loan and your estimated closing costs that you'll need to pay when you close on your home. Now, sometimes the fees listed on the loan estimate will tend to be slightly inflated since a lot of the fees are an approximate amount. Now, you will receive something that's called a closing disclosure at least 3 days before closing, which will have the updated closing costs, because by then we'll know more accurate total of the funds that you'll need to come to the table with at closing. So let's go through some of the key line items you'll see on the loan estimate. I do have another video where I go into detail the entire loan estimate, but today I just want to cover the fees you can expect to see on the loan estimate. So I'll go over the fees you're more likely to see, but again, based on many factors, there may be additional charges that aren't discussed today. All right, the first section of the second page of your loan estimate covers loan costs. Section A contains the origination charges. Here you'll see the cost for the rate, if your rate comes out of cost or if you're buying down the rate. You'll also see the loan underwriting fee, which is a charge by your lender for underwriting the loan. Now, this amount will vary depending on which lender will be doing the loan, but in most cases, I tend to see a charge around $995 to $1,195. You may also see an origination fee, which is a fee charged by the broker for doing the loan, but in most cases, the broker gets paid by the lender, so you may not see this fee on your loan estimate. All right, the next section, Section B, is services you cannot shop for. Here you'll see the appraisal fee, which pays for a professional appraiser to determine the market value of the home you're buying. Now, this is important because the lender needs to ensure that the property is worth the amount that they're lending you. And the appraisal fee is typically around $450 and up, but it will depend on the location and the size of the property. Now, if this is a jumbo loan, there may be a second appraisal that will be required. Now, if you're buying a new home that isn't completed by the time you open escrow, or if there is something that needs to be fixed with the property, such as maybe smoke detectors needing to be installed or a water heater needing to be braced, the appraiser will need to go back out to the property and sign off on everything. So in those cases, there will be a final inspection fee. Your lender will charge a fee to pull your credit report, which helps them assess your creditworthiness. This could be $65 and up per person. In this section, you will see a processing fee, which is typically between $700 and $1,500. Sometimes the more complicated loan programs, like the non-QM programs, you might see a higher processing fee because of the complexity of structuring and working on these types of loans. There's also a flood cert or determination fee, which is usually about $9 to $15. Tax service fee, which is slightly more than that. Other fees might include a verification of employment, which could run up to a couple $100. If you're purchasing a condo, there's a condo cert or a condo questionnaire, which that fee can vary kind of depending on what the condo HOA charges for providing that information. The questionnaire addresses basic information about the development, insurance coverage, rules around reselling, if there's any pending litigation, and so forth. Okay, moving on. Section C are services you can shop for. Now, this is where you'll find the title and escrow and attorney fees, depending on the state you live in. If you're purchasing a home, typically the seller chooses the title and escrow company, but that can always be negotiated. Now, these fees will vary depending on the company that's being used, but you can figure they will be a couple grand to a few grand. So you'll see fees on there such as the escrow fee, lender's title insurance, title search fee, courier fee, notary fee, recording fee, survey fee, text search fee, endorsement fees, and so on and so forth. Now, the title search fee covers the cost of researching the property's history to make sure there aren't any legal claims or liens against the property. The title insurance protects both you and the lender against future claims on the property. Now, if you live in an attorney closing state, an attorney will handle the closing process, and the attorney fees cover the cost of preparing and reviewing the closing documents as well as conducting the closing itself. Now, attorney fees typically range from around $500 to $1,500 depending on the complexity of the transaction and the state you're located in. All right, Section D shows the total from Section A, B, and C. Now, on the right side of the loan estimate is other costs. Section E is for taxes and other government fees. You'll have a breakdown of recording fees and other taxes and transfer taxes. Recording fees are charged by the local government to officially record the sale of the property and the mortgage documents. These fees can vary depending on where you're buying, but they're typically between $50 and $200. Transfer taxes are imposed by the state and local governments when property ownership changes hands. Now, the amount of transfer taxes also varies depending on location and the value of the property. In some areas, the seller pays for this tax, while in others, it is the buyer's responsibility. Section E is prepaids. Here you'll see your homeowner's insurance premium. This will cover the first year of your homeowner's insurance, which will be required for any mortgage loan. This cost will vary depending on the insurance company you use, the policy you choose, and your location. Some locations will be under $1,000 for the year, while in higher natural disaster zones, there might be a charge of thousands of dollars a year for the insurance. Now, at closing, you may need to pay property taxes in advance depending on when the taxes are due. The amount you'll need to pay will be prorated based on the closing date and the local tax rate. You'll also have prepaid interest. This amount will depend on the day of the month you close on and your daily interest on the loan amount you have. Now, if you close on the 5th of a month where there's 30 days in the month, you'll have 25 days of prepaid interest to pay for. If you close on the 22nd, you'll have 8 days of prepaid interest. You'll also see your mortgage insurance premium in this section if it applies. Now, if you're putting down less than 20%, you'll likely need to pay PMI. And some lenders require you to pay the first month's PMI premium at closing. And the cost of PMI varies based on your loan amount, the down payment, and the credit score, but typically it ranges from 0.3% to 1.5% of the original loan amount per year. Section G, initial escrow payment at closing. In some cases, an escrow account or an impound account is set up to pay property taxes and homeowners insurance on your behalf. Now, this means that instead of you making that payment directly for taxes at tax time or to the insurance company when your policy comes due, you'll be making the payments monthly with your mortgage payment. And the lender will take care of paying this to the appropriate party when the time comes. At closing, you may need to fund this escrow account with a few months worth of payments. Now, this ensures that there's enough money in the account to cover these expenses when they do come due. Now, people choose to have their taxes and insurance escrowed because of the convenience and or to help spread the payments out so they aren't hit with that expense all at once. Okay, section H, other. There may be other miscellaneous fees associated with your closing, such as fees for pest inspections or home warranties. Now, while these costs are usually relatively small, they can add up. Section I will be the combined total of sections E, F, and G. Section J will be the combined closing costs from section D and I. If you're getting any lender credits, most commonly from if you select a rate that comes with a credit, which might be a slightly higher rate than if you choose a rate that comes at a cost or with points. Last but not least, calculating cash to close. First, you'll see your closing costs from line J. Then if you're refinancing and wrapping your closing costs into your loan amount, you'll see a line for closing costs financed and payoff amounts. Next, if you're purchasing a home, you'll see your down payment amount and deposit you paid when escrow was open. Then you'll see any credits you might have from the seller or any other adjustments and credits you might have. All of these items will total up to the estimated cash to close. And if you are refinancing and possibly taking cash out, this is where you will see how much you are receiving in cash from your loan. So on your final closing disclosure, this is where you'll know exactly what your final closing costs or credit will be. All right, phew, thanks for sticking with me. Okay, now that we've gone through all of the line items, let's talk about how to prepare for the total closing costs. And as I mentioned earlier, closing costs do vary. For a $300,000 home, you could be looking at anywhere from $6,000 to $15,000 in closing costs on top of your down payment. So it's important to have a clear understanding of these costs early in the process so that you can budget accordingly. Your lender will provide you with a loan estimate shortly after you apply for a mortgage, which will give you an idea of what your closing costs will be. So be sure to talk with your lender if you have any questions or concerns about any of the costs. I think it's very important for your lender to review this document with you because it is such an important document in the process. This document will break down the estimated costs so you can plan ahead and avoid any surprises at closing. Now, if you have any questions about closing costs or if you need help with your mortgage, don't hesitate to reach out directly or drop a comment below. I'm here to help, and if you found this video helpful, please like, share, and subscribe to my channel for more tips and advice on home ownership. Thank you for watching, and I'll see you next week.